Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 21st of July 2024. I'll be doing the weekly market review. So, getting started here with DXY, here we have the weekly time frame chart. As you can see, we started trading down low. We took out the sell side liquidity that was residing below these lows and below this low too, and we filled some of that fair value gap that is residing below this candle's low and this candle's high. And here we're setting out, we created a fair value gap between this candle's low and this candle's high. I'm expecting a retracement towards this fair value gap, and if it was really wants to retrace, it could be retracing towards that fair value gap. How we trade inside this fair value gap will tell me a lot. So we will be monitoring this closely on a daily time frame chart, or even on a intraday time frame chart, such as the 15 minutes or the hourly chart. So my draw liquidity is the low of that fair value gap. I'm looking for buys or long orders towards that low, which is this week's high. Going to the daily time frame chart, you can see how we traded to the rejection block of the weekly time frame chart, and then we started selling down lower, create the bearish breaker. We didn't have a retracement towards it. We had a retracement here, a run down lower. We have a daily fair value gap here. We have the weekly fair value gap here. So we have uh, two areas of importance to me. And just above this buy side liquidity right there, we have this fair value gap. So I'm expecting around towards above that buy side liquidity, which is the beginning of that weekly fair value gap. And above it, we have this daily fair value gap between this candle's low and this candle's high. I'm expecting here price to be walking in this area before running up higher. If it wants to run up higher towards that buy side, the fair value gap, the weekly fair value gap, and this buy side liquidity, or if it wants to reverse here and run even down lower towards this sell side liquidity right there. So that is going to be pretty much it for DXY. Going to ES, here I'm viewing the weekly time frame chart, and I'm also viewing the continuous contract. As you can see, ES is starting to run down lower. I'm expecting, I'm thinking in my own thoughts, my own inner dialogue, that we have started the sell program for the indices. I will explain why we are starting the sell program shortly. As you can see, we have created a higher high here on ES, and we started selling down lower, closing below that weekly fair value gap. This candle's high and this candle's low forms the fair value gap, or the BC, the buy side imbalance, sell side inefficiency. So it's inefficient in sell side delivery. We made it efficient last week, and we closed below that BC, or fair value gap. So now I'm expecting price retraces and treat the low of that fair value gap, which is this candle's high, as resistance. We could have an overshoot, or price could have mohawk towards that candle's low, which is the high of that fair value gap. So from there, it could just retrace and run down low towards this low. Below this low, we have this fair value gap. So this is how I'm looking at it. Going to the daily time frame chart, I just want to draw your attention towards this higher high right there. This is going to be important when we review NQ shortly. As you can see how we took out the buy side liquidity right there, and we started selling down lower, forming a bearish breaker here, and we have a fair value gap, daily fair value gap. So I'm expecting a retracement up higher towards that fair value gap. This candle is low, this candle is high. This is the daily fair value gap. If it wants to run down lower towards this sell side liquidity, I'm expecting a run up higher towards the fair value gap here. Monday, Tuesday forms the high of the week, and then Wednesday, Thursday, we take out this low and this low, and if it wants to run even down lower, we have this sell side liquidity right there. So that is going to be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract, and I'm viewing the weekly time frame chart. As you can see here, we formed a lower high, and we took out the sell side liquidity right there, which is this sell side liquidity right there. We didn't take it on ES, but we took it here on NQ. So here I'm just expecting pretty much a consolidation. We could have a retracement, a bit of a retracement here, and then a continuation to the low of that weekly fair value gap, which is this candle's high. If it wants to retrace even down low, or push tank down lower, we have the bullish order block right there. So going to the daily time frame chart, here's what I'm talking about here. We have lower high for NQ. So there we have an SMT where ES has formed a higher high and NQ has formed a lower high, and NQ has started selling down lower, and even faster than ES is doing. So NQ has already swept the sell side liquidity over there, but ES is still away from reaching towards these sell side liquidity right there. So we'll be considering E as the sixth sister here in this case scenario. So for NQ, since we took the sell-side liquidity, I'm expecting a retracement toward the internal range liquidity, which is this favor gap, the SIBI, sell-side imbalance, buy-side inefficiency. So it's inefficient in the buy-side delivery. So I'm expecting some buy-side delivery into that SIBI or that favor gap, which is this candle's low and this candle's high, before we push down lower even towards the daily favor gap low and the weekly favor gap low. And if it really wants to push down lower, we have this sell-side liquidity pool that is residing over there. So that is going to be pretty much it for NQ. Going to Dow, here I'm viewing the weekly, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, Dow has already swept the buy side liquidity as I was expecting. The previous weeks that I've already reviewed this asset class. And to be honest, this is not the best conditions to be trading at because the markets are not in sync. Dow is running up higher while ES and NQ are pushing down lower. So Dow is pushing for the buy side liquidities and NQ and ES are trying to seek sell side liquidity. And they're trying also to seek the imbalances that are in discount, whereas Dow is seeking liquidity and imbalances or gaps that are residing in premium. So I'll be considering that this is going to be the last time I'm reviewing Dow on a weekly basis, and it's going to be added to the other asset classes that is going to be reviewed on a monthly basis. So every at the beginning of every month, the beginning of that month, I'll be including Dow to the analysis basket, but overall it's not gonna be it's not gonna be reviewed on a weekly basis because it's not a market that I'm looking at the moment due to its conditions and the behavior that it's acting with. So going to the daily time frame chart, you can see we set the buy side liquidity. Here we can have a retracement towards that fair value gap. So I'll be looking for retracement towards that fair value gap. And if we close above it on daily time frame chart on a daily basis, we might see retracement towards that candle's low, which is the inverted fair value gap high, as a support that can run higher towards the buy side liquidity. So I'm not really concerned with Dow and how it's reacting, how it's behaving, because it's not a market that I'm trading actively at the moment and I'm not really interested in trading it due to its behavior and how it's trading at the moment. So I'm just sticking to ES and NQ and maybe some Forex, which is EU and GU, the fiber and the cable, which is going to be reviewed after this one. So that's going to be pretty much it for Dow. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. You can see how cable has, oh, excuse me, sorry, the fiber has, or the Euro USD has swept this buy side liquidity right there, and we closed for the week over here. So as a result, we've created this favor gap. This candle's high, this candle's low, which is this week's trading low. Next week, I'm expecting a retracement towards that favor gap, so we could be looking for some sells towards that favor gap. If it was really animated downside and we want really to sell or to get more orders from that favor gap, we might see a deeper retracement into that favor gap before running up higher towards that buy side liquidity. Or if we get a daily basis close below that weekly favor gap, we might see respect of that low as a resistance and it can push down lower towards that favor gap. Going to the daily time frame chart, you can see that we have a sell side liquidity over here, a low, and below that sell side liquidity we have a daily favor gap. This candle is high, this candle is low, and we have a bullish order block. So here I'm looking for a rundown load. Now on Monday we might have a retracement up here. It could be a consolidation. Tuesday we might form the high of the week, and Wednesday, Thursday, Friday, we might push into this favor gap, run and take out this sell liquidity and trade into that daily favor gap. So that's how I'm looking at it. I'm looking for some shorts into a discount area that we can be accumulating more orders in, and in that retracement, we could be taking some positions towards that drawn liquidity. So It's not enough that, okay, price, I want to see price traces over here so I can buy and aim. No, I'm selling to that drawn liquidity, and from here I'm buying towards that buy side liquidity or that drawn liquidity. So I'm making money both ways. I'm making money what price is pushing down lower, reaching to an area of discount that people or smart money or the market makers or whoever you want to call them are accumulating orders. I'll be accumulating orders with them after mm, I accumulate some shorts here and I distribute them at the favorite gap, and I reverse my position into longs and pretty much push to the upside towards the buy side liquidity. That is if we still are looking for higher prices. And how am I going to be trusting this is by monitoring price on a daily basis on intertime frame chart here. So that is going to be pretty much it for EU, or also known as the fiber. Going to pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. As you can see, cable has already attacked the buy side liquidity. This is the buy side liquidity that is viewed on the daily time frame chart. I'm gonna be viewing it on a daily time frame chart too, but I just wanna show you what is this line here on the weekly time frame chart. After this, we have this buy side liquidity that I have drew your attention towards. We have a weekly favorite gap that has created as a result of last week's trading. This candle's high, this candle's low, which was this week's trading. We have created a busy buy side imbalance, sell side inefficiency. So it's inefficient in a sell side delivery. So we might see a retracement work inside that favorite gap to make some of that busy efficient by providing sell side delivery into it. Going to the daily time frame chart, you can see how we formed a high here on Monday at exactly at the buy side liquidity, tricking every trader out there that it is going to be trusted as resistance. And then on Tuesday, it's pretty much making them feel comfortable in their positions. Wednesday, we rallied up higher, took out their positions, took out the buy side liquidity, reached to the favorite gap, which is the drawn liquidity that I was aiming at. You can go to your daily time frame chart and you can go to the past. Above that high, we have a favorite gap. So every time we're looking at a BD array as drawn liquidity, we look way past it for some type of a mohawk movement. So above that parcel liquidity, we're expecting a mohawk towards that favorite gap. Every time you expect that type of movement. So now if we're expecting a retracement right now towards that favorite gap, which is this candle's low and this candle's high on the daily time frame chart, a mohawk that I'm expecting is towards that bullish order block, and we have a small favorite gap over here. So that is the type of a mohawk that I'm expecting. It's a concept that I'm expecting a mohawk or a pretty much an over animated movement in the same direction that is of the low liquidity that I'm aiming at. Let's say now I'm looking for lower prices, looking for some shorts toward that favorite gap. We might reach to that favorite gap. I'm gonna be taking my profits. I'm gonna be pretty much closing my positions in that favorite gap, but I might keep very small positions as a runner. And where am I going to take the profits for that runner? It is in the Mohawk area or the BD array that is past the drawn liquidity BD array that I'm aiming at. So the BD array that I'm aiming at for profits is this favorite gap, the daily favorite gap. We might see an over animation, a runner to be hitting the bullish order block or that small favorite gap over here. So we'll be getting more profits there. So that's how I'm looking at it. I'm looking for some shorts towards that favorite gap. So I believe that's going to be pretty much it for this weekly review. If you have any questions or if you want to discuss any type of information about trading, etc., please don't hesitate to message me on Twitter, or now it's called X. I have my Twitter handle in the description below. It is Liquidity Club. Also, you can join our Discord server where I share some of the live trades that I take. Sometimes we have a tape trading sessions live in the Discord server, and if you have any questions, you can also ask them there. We have a good community there. I really hope you found this one insightful. Until I talk to you next time, be safe. Wassalamu alaikum warahmatullahi ta'ala wa barakatuh.